This isn't like puff piece type thing where I'm just bringing on guests so they can puff out their chest and brag about this is what I've done and what I'm doing. But it's more like we're teaching, we're adding value, we're letting you know from our experience what works, what doesn't.
Most hosts never achieve the results they hoped for. They're falling short on listenership and monetization, meaning their message isn't being heard and their show ends up costing them money. This podcast was created to help you grow your listenership and make money while you're at it. Get ready to take notes. Here's your host, Adam Adams.
What's up, podcasters? It is Adam A. Adams, and I'm stoked because we've gotten a lot of written ratings and reviews just coming into the show. Every now and again, I spend just a minute or two reading one of those written ratings, and there's a couple reasons why. One is I want to build the social proof. I think it's important that you know other people are talking good about us. That's one reason for sure. The other reason that I'm reading the written reviews on the podcast is because way back in episode 100, I mentioned that I'm going to be gifting some of our services. I'm going to be gifting launch packages if you don't have a podcast, or I'm going to be gifting our marketing package so we can get you in the top 10% or top 1% in the entire world. And or I'm going to be giving away some editing. Now, as you know, the last winner was Matt Cummings. Congratulations, brother. We're excited to work with you. And I love that you're going to be able to do this and you don't have to pay a dang thing. It's pretty rad. And if you're listening and you want to follow Matt's footsteps, here's what you do. Write an honest written rating and review, honest review, and then just send it in. And if you do it on iTunes, we're always checking iTunes, Apple Podcast. If you're doing it there, then we're going to get it. We're going to read it live on air, and that gives you one entry. And if you want 5 more entries, the day that we read it, you just screenshot it and say, hey, I heard you. I heard that you did it, so I'm going to get 5 more entries. Matt did that. He got his total of 6 entries, and he won against the other 4. Today, I'm going to be reading Eileen. Now, it's funny. Eileen is already a client, and she's been a guest on the show too. So Eileen, you've already got 1 entry to possibly winning 6 months of free stuff. So we're already working for you. You just might get one of your episodes per week because Eileen does 5 episodes a week. I know because we work for her, but you'll be getting one of those for free, Eileen. All you got to do, my friend, is take a screenshot of this review and say, I heard you say my name on the podcast, and that'll get you 5 extra entries. And you'll be going against Stacy Katrina, Cityside Capital, LZ Flennard. Sorry, I don't know why I said that, but LZ as well, who's another podcast consultant. You'll be going against these people for the December. So Eileen, go ahead and do that. I would love it if, hey, we're already working for you. Why don't we do it for free? That just makes sense. Eileen says, truly value add. Adam is such an amazing host and always provides so much value to the listener. He's genuine in his approach, and you are sure to learn tremendous amount. Highly recommended. Eileen, my friend, I appreciate you taking the time. It was good to have you as one of the guests on our show, and we will also queue up your podcast episode down in the show notes. So I'll make sure that my team grabs that episode where you were featured on the show so that any other listener is able to go and listen to that and get to know you and the 5 episodes a week that you're already launching. All right. I don't want to spend too much time on this, like I say sometimes, but I do want to spend enough time. But let's get into the content for today. And we're back with another episode of Podcast on Podcasting. I'm actually really excited because a friend and somebody that we work with is going to be sharing his journey of his podcast. It's a fairly new podcast, but it's growing really, really well. He's doing an awesome job. You can get his entire bio just by scrolling down. He's got his own company called Greenbriar Capital. And additionally, prior to that, his main job was working for some funds, like more institutional. What's really impressive, I haven't actually met people that have done this. So Shawn Winslow, he's really the first, but he's actually brought in around like 1.5 billion with a B. Now, I'm pretty sure I'm reading that right, Shawn. Is it billion?
Yeah, that's correct. I was on a team, so I would never take full credit for that.
Okay.
But yeah, we brought in 1.5 billion, correct.
That's amazing. And we were talking right before we press record. This is like partial like private equity and partial fixed income asset. Tell me a little bit about those before we jump into like your podcasting journey.
Yeah, so it was fund company. So think We had equity funds, we had fixed income funds, and it was both institutional and then more private investors as well. So we were raising for traditional, think like a stock fund or like a bond fund, that type of investment vehicle that everyone's conditioned to put in their, say, 401k retirement plans.
And I really am excited about what you do and what your business, Greenbriar, does. To our listener, now, this is not a real estate podcast. I've said that before. I am a real estate investor. I've been doing it for many years. And as a result, I have a lot of connections in the real estate industry. Now, our podcast services, we serve a lot of different types of people, like a lot of real estate coaches, life coaches, business coaches. We serve a ton of different people, even people in the arts space. We're like editing and promoting their podcasts. So it doesn't have to be like, you don't have to be a coach or a real estate person to have a podcast or to work with our team. But it just so happens that many people that we do work with happen to be there because I have a long time in that. Now, Shawn, you've done a ton of things that I've not done. I know that this company that you work for is like one of the top 10 largest investment firms in the world, which is incredible. But I noticed that you kind of stopped doing that for a certain reason. That's one of the reasons why I want you to kind of shine and share a little bit of like your why behind your company, starting your own company, is because you're really doing people a service. And it's almost like this, and I might not be saying it correctly, and you can definitely correct me, but it feels a lot like you almost thought that doing things this way wasn't the very best way to invest your money. And so you decided to kind of go another route. That's where I want you to take it, just in case the listener might be like your perfect avatar. Go ahead and share them a little bit about what you do. And then I am excited to get into your journey, how you started your podcast, why you named it that, whether you're editing your own or offloading it and why. But yeah, just take a moment to help us understand why maybe Wall Street, for example, isn't or might not be the best for everyone.
Yeah, thanks, Adam. And you're absolutely correct. That is why I got out of it. I went into it to help people grow their nest egg, obtain that financial freedom. We all want, become a buzzword of late or buzz term, but that financial freedom. We all want the ability to do what we want, when we want, with who we want. And with that comes something called time freedom. And traditional investing, which has been ingrained into our way of thinking for so long, is not the way to do that. So I went into it working for a firm on Wall Street. When I left, we had $1.7 trillion in assets under management. So big firm, a lot of marketing power, which Wall Street is, a lot of marketing power to condition us to think we work our W-2 job and then we invest in stocks, bonds, mutual funds, ETFs, and that will get us to the finish line. But does it really? And what I realize is it doesn't get us to that finish line we want. We work until we're 60, 70 years old, and then we have to take a step back in our lifestyle. So I left that world because it didn't meet my goals of helping people obtain that financial freedom. And from a morality standpoint, it just seemed like they were more concerned about their wallets than their investors' wallets.
What do you mean by that? Before you jump into always liking real estate, you're saying that some people on Wall Street, or maybe it's everybody, but there has been a thing where in some cases you've noticed that maybe they care more about their bottom line than maybe like giving the returns that they could to other people. What exactly do you mean by that? Where's the problem? Don't just say it without backing it up, I guess I'm saying.
Yeah, like there's several layers of this, and I won't get too technical because it could turn into a long podcast. But for one, they will sell you a type of investment, and then they will take a position that's opposite of that investment. So by position, I mean they put you in a position where you're long, so you're hoping that it grows over time. And then they'll take a short position where they're hoping it doesn't grow over time. So there's a lot of conflict of interest there. That to me, they're not going to bet on a short position if they think they should be in a long position. So they're putting you in a position they feel that is not going to happen. And that just doesn't sit well with me. And on top of that, there's another layer, maybe for more traditional, that's kind of more private equity, big bank stuff. But then just take a look at your financial advisor. There's something called churning accounts, where essentially they're just making trades because they get paid off a transaction. So The trade might not be what's best for your account, but they do it because they want to make more. So then the business kind of slowly transferred to something we call, they would take like a fee type of management where they're taking a fee to manage your assets. And still there's conflict of interest there because all they're trying to do is just gather. And all they do is while they're gathering, they're just placing it into what is their recommended list that their back office, their firm, like the big names, I don't want to name any here, but you know the names. They'll give a recommended list of the funds they feel are the best for you, but are they really? And the answer is no, because it's a pay-to-play strategy where they're paying, like the firms I worked for, there's a revenue sharing. It's like, so my firm would pay $1 million to get one of our funds on the recommended list. That doesn't seem very moral to me. And so is it really a recommended list? I don't think so. It was that type of stuff that...
It should be a sponsored list.
Right, exactly. Yeah. Like we're sponsoring your podcast, we're sponsoring your investments, you know? So it just didn't sit well with me. And so, I always loved real estate. And that originally I thought I was just going to build a portfolio for myself on the side. Yeah. And then just educated myself and found ways that I could help people invest along with me. And so that's where I'm at today.
So obviously you're passionate about there being a better way to invest where perhaps you're aligned with the person who's making the calls and they're not giving you a long position, taking a short position, beefing up the stock so that they can get in and out and make a little bit of money and leave you kind of high and dry as they drop the price of the stock, perhaps. So the other way is real estate investing, and you're doing similar to what you did back then, right? So what I mean by that is that you still raise money. You've raised 1.5 billion with a team, and that's gone into stocks. Now you're doing and other types of things, but now you're focused more on more tangible, like apartment buildings, for example, so that the people that you work with can be like in an equity position with the same goals as like the operator of an apartment. Is that right?
That's correct.
Now, what am I missing in your current business plan? Because understanding, like the reason why a lot of us start a podcast, it generally will hinge on what we're trying to do with our business. And we're not talking about real estate because this is a real estate show, but we're talking about your business, Shawn, because having a podcast oftentimes needs to be somehow connected to that greater purpose, what your big why is. So if you don't mind, share a little bit about what I might have missed of what your business plan is, what your business does, so we can start to find out how the podcast answers some of those questions.
Yeah. So what we do is we buy multifamily apartment complex. Think of the big ones you drive by, 100 plus units, garden style. So meaning, usually 2 floors, walk out, there's common area, common amenities. We're buying those type of properties in emerging markets, specifically the Southeast. So these are markets where there's a lot of job growth. So a lot of employers are moving in, expanding. A lot of people are following those jobs as well. And we acquire these assets with our investor partners. And usually we're looking for something we call in the value add. That's usually what we call in the industry is value add, where you're going in. It usually needs a little love aesthetically. There is what we call deferred maintenance, which simply means they just haven't been taking care of the property and doing the proper upkeep. And also poor management. So the current management company that's in there or management team is just not performing. And what we come in and do is we bring our systems and processes, our capital to improve that property. And usually it's like a 5-year hold, and we pay our investors a return throughout that hold. And then on the back end, when we either refinance or sell the property. And the reason why I love this is because it provides our investors with true financial freedom. We're building their nest egg, provides them cash flow. So when they go to retire, well, one, they generally can retire earlier than they could on traditional investment track. And then 2, when they do retire, they've built up enough passive income, so cash flow from these investments, that they do not have to take a step back in their lifestyle. It doesn't diminish their lifestyle that they were used to when they were working their W-2. And to me, that's what's most important. I don't want to retire and take a step back in life. That's not what I've worked so hard for. I want to be able to maintain that lifestyle that I had when I worked. So that's what really gets me going. That's what my company is there to do, to help others. It gives them a way to invest in this type of asset that traditionally was only meant for big institutional or very wealthy people. And this allows the everyday hardworking person to get in and, reap the benefits.
For me personally, because I've been involved in the same industry, I can confidently say that returns that people get, like with something like this, it's called syndication, by the way. If anybody is curious about it, go to Multifamily Money podcast. There's a lot of information found at all about like syndication and how it works. But I'll just say before you do that, with my research, I've found that the returns are typically stronger and higher, like better return than you could possibly even get in the stock market. But the coolest piece that is helpful for somebody if they want to be a passive investor to something like that is to notice that there's just a higher volatility that just means ups, downs, big swings with things like the stock market versus something like these apartments where the ups and downs, it's mostly steady and climbing up versus like, it's so good. And then tomorrow it's like, not only is it bad, but we lost part of our investment. And then it's like coming back and going, it's just that yo-yo in the stock market. It gives a lot of people anxiety where they would prefer having something like a multifamily syndication where they can put their money in and they're getting like a distribution while it's happening and then a big chunk after like 5 or 6 years. So again, that's Multifamily Money Podcast. That's Shawn's podcast. Go check it out, especially if you're interested in what he's doing. But I want to talk a little bit about Multifamily Money Podcast. And where I would like to start is where you started. Because we were working with you near the beginning, and I recall that it was going to be called something about millennials. And so I'm really wanting the lesson here is for our listener on titling a podcast, what to think about, what to consider when coming up with the title of your podcast, because you pivoted. And I want to understand that part of your journey before we talk about like the rest of your podcasting journey, if you don't mind.
Yeah, of course. And I just want to highlight what Adam said on the whole volatility thing. That's very important. A lot of people don't realize what it actually means because volatility can erode your returns. And what I mean by that, you can have two different investments, one that is like a yo-yo, like the stock market, and one that's a fixed return. And they both will have the same average return, so say 7%. But at the end of the day, the cash value in the one with the fixed return is greater than the one that is a yo-yo. Even though they have the same average return, you actually have more money in that fixed return. That's because the yo-yo, you lose money, and then it's going to take more to get back to whole before you even start making money. Sorry, I just wanted to hit on that point you made.
I'm glad you did. So let's go into the title of your podcast. Yep. Like you had a different title in mind.
I did.
Yeah. So let's talk about that a little.
Yeah. So it all started, I was at a mastermind with our good friend, Corey Peterson. And I knew I wanted to start a podcast because we'll get into this probably why I started, but I knew I wanted to start one. So we were brainstorming on names and people were throwing stuff out there. I said how I wanted it to be talking about multifamily real estate investing and also personal finance because it's not what you make, but what you keep. And so then people were throwing names around and one that came out was Millennial Millionaire. And I didn't really like it at first, but everyone just got super excited about the name. So you know that feeling when there's a lot of energy and buzz around you, then you kind of jump on. So that's what I did. I went with the name, bought the domain, paid someone a small fee to make a logo and started branding it. And then I started recording podcasts and the intros had that name. And then I met Adam. Well, I knew Adam, but then I was recommended to Adam from our mutual friend, Corey. And yeah, we got talking and he said he didn't like that name. And I told him, I actually didn't like it at the beginning either. And then I talked to Corey and he said, yeah, I didn't like it at the beginning either. So then we pivoted and we came up to what it is now, which is Multifamily Money.
So you paid somebody to create a logo, and I think it was like a double M logo.
Yeah.
And if you're curious what this looks like, just go, we put a link in the show notes, and in that link is literally just Shawn's podcast called Multifamily Money Podcast. And so you'll see the original logo as soon as you click on there. But it was first the Millennial Millionaire. And when Shawn and I were talking, I was only thinking like, who are you trying to attract? And he was basically saying who would be the best person to listen would be somebody who probably had a full-time job. They probably were in the stock market, didn't know anything else. They wanted to retire. And I'm thinking like, how old are they? And if I remember correctly, your avatar was like 45 years old or something and not what?
A millennial.
30, 35. Yeah. And so it's like, how do we attract that right person? Right. And so was it hard for you to get rid of Millennial Millionaire? I mean, especially because you had already bought the domain, right?
So I guess from like a technical, the fact that I'd have to go back and like rework everything, it was hard. But from an emotional standpoint, no, because I actually never thought it really fit my personality, to be honest with you. So it was kind of like a relief that I was getting you and our friend Corey to kind of push me to make the change. So one, I'm glad we started talking when we did, because if not, it's kind of a harder change to make that change before it's launched. Yeah. I mean, after it's launched than it is before. So,
and how much did you buy Millennial Millionaire for? You don't have to say it on air, but I am curious.
It was cheap.
Dude, you could sell that thing for several $1,000s. Just go to social and be like, who wants to buy this? Starting bid, $8,500. And I bet you'll easily make some money off of the domain. There's a lot of domain brokers out there as well. I recently purchased a URL that was kind of expensive. Yeah. So I know that they go for 6, 8, 10, 12, 13 with no problem. So it was... Step one was kind of like titling the podcast. Step two, you started recording some episodes. In fact, it sounds like you had to re-record parts of those to kick out. What other like beginning steps were there for you to start your podcast? Like whether they were good, scary, necessary, or you just kind of maybe even went AWOL for a second on accident. What other steps were you looking at when you were starting the podcast?
Yeah. So one, how did I want to format it? How many days a week did I want to publish? And I think from the very beginning, it was 2, because I had the real estate part on Monday and then the personal finance on Friday. So then we kind of had a brainstorm of how those 2 could blend, because you don't want it to be 2 completely different like types of shows, because then it's like, well, why don't you just have 2 different podcasts? So we wanted them to kind of blend. So that took some brainstorming that Adam and I did at the beginning. Kind of had to get the vibe of the music. That's not as easy as you think, because you can hear a song that you really like, but does it fit the actual vibe of your show? So Adam and I went back and forth on that. We took polls from people. We sent it to them and see what they thought. And we select that music. And then it was the intro, the outro. And then it was kind of how we wanted to brand it. Colors, font, picture or no picture on the artwork. And that was stuff that I'm so glad I had you for, because I've never done this before. We were talking about before, this is not my expertise. I don't edit stuff. I'm not a graphic designer, not a video editor. So I'm so glad I had you and your team, which are wonderful, to bounce things back and forth. And then it was just down to doing it, put it together, finding the right people to interview, and then just hit and record.
So like on your podcast, brief us a little bit about what is the goal of the podcast, and then share with us, because of that goal, why do you ask certain questions on your interviews, for example?
Yeah. So the goal of the podcast, so from my background, like we were talking about before, I was with a firm where my team raised over $1.5 billion. And that was because we had a 9 to 10 figure marketing budget. So our name could be blasted out there. Our product was blasted out there. We had huge networking events with different firms that you could network and meet people to further get our products out there. So I knew I needed that to get my company brand out there, get my name out there, get what I offer out there. And I don't have 9, 10 figures to do that. Maybe one day, guys. But so I needed to get my name and my message out there. And I talked to a lot of successful people that I want to emulate one day. And they all said podcasts. So I knew that's the way I had to go. For someone starting out, it's the most cost-effective way to do it. And it's also one of the fastest growing mediums on the planet. People love listening to podcasts. I love listening to podcasts. So I knew it would be a great place to start. And so the purpose of it is, to get the message out for Greenbriar, find investors, because that's an organic way to do it, because they're going to listen to me. They're going to get to know me. They're going to get to like me and then eventually trust me and want to invest with me. And that'll give me investors that will stick with me their whole investing career. And so that's what I really want. I want to be able to establish long, beneficial relationships with people where not only am I helping them grow for their retirement, but I'm also connecting them up with them on a personal level. And I think that's what the podcast will bring in. And then two, it's also from a networking aspect. Because for those of you that are listening that are in real estate and those that aren't, it's all about relationships, networking, and teaming with people. No one goes at this alone. So by interviewing people in the business, I can grow relationships with them as well and potentially partner with them or network, and we can all help each other out. And the whole purpose of it is to bring value, not only to the listeners, but to my guests as well.
I will say that I'm really glad that you brought up that piece, that second piece. Like, not only is it to attract like passive investors that want to be part of the same types of deals that you want and share in the upside, but you're also getting a lot of networking. Like if you're listening and you believe the saying, your network is your net worth, and you don't yet have like a really solid network, maybe that's why you're not making the same amount of money that you really want to make. Your net worth isn't where you want it because maybe you don't have that network yet. And so really growing that network is going to benefit you. And Shawn's being able to get that as a secondary benefit through podcasting, through interviewing the types of people he wants to be around. Now he's becoming friends with some of these people. And as a result, it's growing his business. So I love that you brought that up. Speaking of like the two-part goal that you have, how does it influence like how you run your podcast, your Financial Fridays episode, and the questions that you are asking guests on those episodes?
Yeah. So mostly the Finance Fridays have been just solo episodes of me teaching what I know, but I will bring on guests because I've had people reach out from that space, which is great. So that'll be really interesting to bring that overlap in. And more often than not, they have a real estate connection too. So that's even better. But yeah, what shaped it is what I previously mentioned about bringing value. So this isn't like puff piece type thing where I'm just bringing on guests so they can puff out their chest and, brag about this is what I've done and what I'm doing. But it's more like we're teaching, we're adding value, we're letting you know from our experience what works, what doesn't. And also just the fact that anyone can do this. It's, as I like to say, it's simple, not easy. Anyone can do it. You just got to put the work in. And we want to share that. And hopefully at the end of the day, we're providing value to the listener. And I look at it two ways. Either they're going to dive into it and want to do what we do, which is awesome. And then maybe I can partner with you in the future. Or two, they're going to dive into it and be like, this is a great investment, but I don't either have the bandwidth to do that, or I just don't want to do that. So those are the kind of the two people. And either way they go, that makes me happy knowing that I'm providing value. So I tailor my questions in a sense of like what I would want to know, either starting out or even from a high level. Like I just had a guest on today that I interviewed where we hit both ends. We talked about in the beginning what a new investor should know. And then at the higher level, this guy has over 600 million in multifamily real estate. So we talked about like, well, at your level, what should people know? So it's really tailored to just adding value to our guests.
I completely agree with that. And I think adding value is really important. And it sounds like if you're trying to attract certain people, you want them to have a place where they can go and get what they're looking for. So you're delivering that on a regular basis. One thing that I noticed, because I was just actually scanning your podcast even right now, something that I really enjoyed that you did, and I want to find out kind of why did you do it that way. I think that it's just so smart and really helpful that our listener could do the exact same thing and get tons of benefit from doing it. And that is the fact that like looking at episode, I think it's something like 12, 14, 16, 18, and 20, I think, were episodes of part 1 of 6, part 2 of 6, part 3 of 6 on all of the even numbers. And I think that was like your financial freedom Friday. And almost every single one of these is like 4 to 10 minutes. And I think that there's a lot of wisdom to it. And I'm curious, what made you, when you could have easily just said all of the stuff in one episode, one long 1 hour episode, why did you split up like 5-10 minute episodes over the course of 6 different things where it's part 1 of 6 and so on? What kind of made you decide to do that is really where I'm looking. And I'll probably give you some follow-up questions if I have them.
Yeah. The short answer is we spoke and I told you what I wanted to do and you told me to put it in 6 parts.
I forgot that. I forgot about that.
But
that's funny.
But I wanted financial freedom. That's what the podcast is about, is attaining that. And to me, like a lot of people say, financial freedom is essentially covering your expenses with passive income. And to me, it's more than that. To me, that's still kind of living paycheck to paycheck. What if something happens to one of your streams of income where you can't meet that? To me, you want to go like above that. And depending on what type of lifestyle you live, that could be 50% above that, could be 100% above that. So yeah, I wanted to put together my 6 steps, what I think based on successful people I've met, based off of successful people that everyone would know, like a household name. I did research, and these were the 6 most common traits they had that allowed them to achieve financial freedom. So we broke it into 6 parts, which I think is great. 1, it's easy to listen to, and you don't kind of, sometimes when you listen to podcasts, there's a bunch of steps dragged over a long period of time. It kind of just melds and mixes together. And I think just separating it as actionable steps in a short podcast, it was really beneficial. And the fact that from a podcast standpoint, growing your podcast, it's going to get people to come back and wait for the next one instead of just getting it all in one episode. Like, oh, I got to wait for next Friday. I want to hear number 2. Oh, I got to wait for the next one, number 3. So I think that was a genius move on that end.
Yeah.
On your part.
It's weird because I forgot that we had that conversation, but I think there's a lot of benefits to it. And I think it can help other podcaster who's kind of listening and wanting to get some really good ideas. One of the things that you mentioned is they're more bite-sized and they're actionable. And I think that is a huge benefit to the listener. One of the benefits that I think you get to it is you basically record, you have one idea, but you're able to get 6 episodes out of it. So it just supports you to be able to do a little bit less effort and get more result. Another thing that I really like, if you're listening to this podcast right now and you hear some weird background, they're drilling in the room next to me. If you hear that, I can't get rid of it, and then we're not going to stop the recording. And
I haven't really heard it, so
it's like really distracting to me right now. I'm glad that it's not distracting to you guys. But the next thing that I really think is a benefit to you, besides just getting to be able to have more content with kind of less effort, you mentioned that you might have people that want to like hear the next one and they might want to stick by. And I think that they'll be up for the next several years, right? Like these 6 episodes will be up for the next several years. And so you'll be able to point back to it and say, oh, well, listen to, I think it's 12, 14, 16, 18, and 20. Go check out 12, 14, 16, 18, and 20. Those episodes are going to solve XYZ problem. And you're going to get multiple downloads per day as well from one person who kind of binges through all of those. And that's just a huge, basically an SEO type benefit that you get as well. So I think it's really smart. I'm sad that it's my idea. And now I'm just like beating a chest. So forgive me there. But I think what you did, though, is going to really help your podcast and support you. You started a little bit differently. Like our listener, 9 out of 10 times when they started their podcast, they went into like editing their own. They're like, okay, if I have a podcast, I got to edit my own. At least me 5 years ago, when I was starting my podcast, I didn't even know that there was anybody that could do some of that stuff for me. So what kind of went into like your decision to just completely not learn that, to skip that, and to feel like maybe even confident that you could have a show without knowing those parts or being really good at editing?
Yeah. So from the very start, I knew that I was going to offload that work to someone. I didn't know who it was at the time, but I knew that was going to happen just because it's not my background. I'm not technically inclined when it comes to graphic design, video editing, audio editing. I know I could figure out. I've done it before, but I was telling Adam before this, I would record something. It would probably take me several days to get it done. And that's just not a good use of my time as a real estate investor. Like I have a fiduciary duty to my investors to be a steward of their capital, their hard-earned money. And if I'm spending majority of my time editing video and audio and not spending time operating these investment properties, that's not fair. And I should get out of that business. So I needed to offload this because I knew I wanted a podcast. I knew how powerful they are, how beneficial it would be to my business. So from the very beginning, I knew I needed to offload that. And I was willing to do what it took to do that. And luckily, I found Adam and his team, which have been godsend, lifted a lot of stuff off my shoulders.
So, like, you never would have done this on your own. You always, that's so funny because most people, they don't think that direction. I want more people to think your direction, and not as like a self-serving, like we serve people and we do a lot of that work, but it's like, you mentioned it. You've got a responsibility to the people that you work with to really focus, and figuring out how to edit. That's a whole different set of skills, and it's time consuming. There's so many people that start a podcast and it's either like a budget. They're like, I need to save money, or it's like, I was told that I needed to learn this or else I couldn't offload it, which is, I think, is total BS. If I need my refrigerator to work, I don't have to know what Freon is to have somebody who knows what they're doing. You're allowed to own a fridge if you don't know what Freon is, right? You're allowed to live in a house if you don't know how to put on a roof. There's no discrepancy there. And I'm passionate about it because I did like 300 of my own episodes before I offloaded it to my assistant and taught her how to do it. And she started really crushing it. And like my life changed. Like,
I'm sure.
It was like night and day, right? And so offloading it to somebody else, I believe, does what you said. It allows you to be better at your business. But one misconception that I think a lot of people have is, I don't want to pay $100 or $200 or $300 per episode to have somebody else do all this stuff. And I'm just going to, quote, save the money by doing this other thing. But what I've seen is that a lot of people's, like, their hourly rate, what they can make in their business, is so much more than you're paying $10 or $20 an hour for somebody to edit it.
100%. And the way I look at it is, think about like mowing the lawn. And I know there's people that love mowing the lawn, but like my dad, some people, it's therapeutic. But think about it from like a business standpoint. Most people look at it like, let's say it's $70 to have your lawn mowed. That's $70 that you would be saving. Most people look at it. So I'll just do it myself. But no, what is your time worth? Let's say you make $200 an hour. So you're actually losing money by not paying someone that $70 to have your lawn mowed, because that's an hour where you could have been generating $200, but instead of paying someone $70, you're losing that $200. It's that whole opportunity cost.
And I think mowing a lawn takes more than an hour. Well, it depends. Some lawns take 5 minutes, but if you're going to edge it and you're going to spend time to make it quality, that's not 70 an hour. That's 25 an hour. That's almost 3 hours in some cases. Yep. But I completely see that. And I think that staying in your lane is helpful for most people. If you started it all over again, Shawn, like if you today needed to scrap your podcast, burn it down, and you were going to start from scratch, what specifically would you do differently? Now, I know you've offloaded a ton of this to our team, but like, knowing what you know now, is there anything that you do a little bit differently?
I definitely would have created a little more of a backlog. Like I had a decent backlog of episodes pre-recorded before launch day, but I definitely would have done more. As we all know, kind of like you alluded to the previous point, is creating content is time consuming. It's exhausting. And creating a 6-part series, that helps relieve some of that stress and that effort of creating content. So I think having more of a backlog, maybe a few 6-part series, obviously you got to spread them out, but having that ready to go just relieves a lot of stress and anxiety in the sense of like, oh, what are we going to launch this week? I didn't have a guest, so now I need to create some content for a solo episode. And sometimes you can create content doing that, but is that really the life you want to live? It goes back to my whole like time freedom thing and also creating great content. So I feel like having a backlog and more of a mapped out direction of how you want it to go. If I had to start over, I would have done that. But for the most part, it's been great since I offloaded it to you so soon.
Having a backlog is something like for me personally, and there comes that sound in the background. If it's bothering anyone, sorry.
I can't hear it.
I'm glad you can't. I hope the listener can't also. I try to get a really good mic that will only really pick up stuff that's right next to it, but we'll see if it gets in the recording. It's loud for me. You were talking about getting a backlog, and I have just a huge backlog. Like I recorded on one of my podcasts that I had launched, I had recorded over 120 episodes before it ever went out.
Wow.
The one that I have now, I have 10 months of extra content, like this podcast right here, the podcast on podcasting. We've got 10 months of episodes recorded, ready to go. I think they're all edited as well, all that stuff. And it's really cool to have the feeling of like, you don't have to stress about it. It's always going to happen. You don't have to focus on it. If you don't record for a little while, you'll be fine. We have a client, and it's really honestly more than one client, so I'm sure the listener can relate, that they're like working the day before or 3 days before for the podcast episode that's supposed to go live this week. They're only working on it this week. And what I've noticed for anyone who does that is they seem stressed out. They seem like they really have the pressure, and it makes a fun podcast that allows you to network and get more of your target audience, your perfect client working with you. It takes the fun part away, and it creates more like stress, and it feels like a chore more than an opportunity. So with you, what type of backlog did you have? And unless we've covered it, like why would you want a bigger backlog than you actually did have?
So I launched in the summer, and I had probably 20 to 22 in the tank, but it's summer. So that got depleted fast, and it was hard to get guests on because it's summer. People are on vacation. They're doing stuff with their families. So that got depleted fast. Luckily, I had the 6-part series, which I had to create myself anyway. So it's not like I had to wait for guests. But once that kind of ended, it was like, all right, now I've really got to try to get people. And they slowly trickled in. And that forced me to make some solo episodes. Not that they were bad episodes, but I wouldn't have necessarily launched them when I did, but I had to. And it goes back to what you just said, the whole stress thing. It was stressful. I got to create content. I got to get this up so your team can edit it so it can get out on time. And it's not the way I want to live personally. I want to be able to not worry that I need to get an episode out the day before. Right now, I'm really growing the backlog again. It's funny, we spoke about this of what I need to do to get more guests in a timely fashion. Ever since that conversation, I've just been flooded with guests. So
nice.
That speaks to put it out in the world. Speak the words what you want.
Yeah, congrats.
Thanks. So I'm building up right now, and it's going to take a lot of my time. I'm super busy. This is my 4th podcast of the day. And I got one after this. But I'm going to build it up now. So then I'll have a big backlog, and then maybe I can do 1 a week instead of 5 a week. And it leaves a lot of weight off the shoulders, and I'm able to focus solely on my business. And so I'd recommend that to anyone. Create a backlog.
Sorry, I cut you off. Keep going.
No, I was just saying, if you don't have one, then get on it now. Work a little extra hard right now to create one, and it'll be the best, I promise.
So I'm a listener right now. I'm either driving or exercising or cooking something, playing with my kids, or I'm on a trip right now. And I just heard you say you would have created more of a backlog. And the host asked you, Adam says, how many did you have? And you replied with 20. Well, I just got in an accident. I was bench pressing and I just dropped that thing on my freaking chest because 20 wasn't enough. That sounds crazy. If you haven't done that, if you haven't had a backlog of 20 or more, that sounds nuts that wouldn't be enough. So can you go into a little bit more detail on how that possibly wasn't enough? Because I know the listener's asking.
Yeah. So I do 2 a week. So that's only 10 weeks, right? Of podcasts. And just think like that goes 10 weeks when you think about it is a long way out. But after it happens, you're like, whoa, that went by fast. And if you're not staying on top of your game of doing 1 to 2 a week, that backlog is just going to go away so fast. And on top of it, since I started with you from the beginning, a great way to launch is to put out 1 every day for the first week. So we did that. So that eats into the 20 right there real fast. So then you're only down to way less than 10 weeks, maybe 5 weeks. Yeah. So it eats into it faster than you think. And you need to constantly be keeping that backlog. I would say find a minimum that you're comfortable with and always keep it at that minimum.
Yeah. Well, I'm looking at your podcast and I can tell that at least as of the day that we're recording this, you're literally in the top 10% in the whole world of all podcasts, like every genre, which is freaking awesome. Like you've made it at least there, there's maybe 9% above you and 90% below. And that's something to feel proud about. With that said, if I could pour into you and it be recorded and it be something that I think every listener can also benefit from, what I would say is right now you have plenty of ratings and reviews, but I think one thing that you probably have not yet done is actually called some friends and some family and ask them for an honest review. And so I'm just going to give you, and we're going to write it down and we're going to make sure it's in the show notes as well, a quick, easy to follow formula. Now, the hard part of the formula is if you can call 200, you call 200. The easy part is you just call however many you can. If it's only 5 people, it's 5 people. But what you would say is, hey, Shawn, hey, Adam, the reason I'm giving you a call is because I just launched my podcast this summer. I don't know if you saw that. I don't know if you knew about it. But right now, my podcast coach just said what could really help the podcast grow is if I had a couple people that I trust. Write that down, underline it, a couple people that I trust. That part's critical. My podcast coach said that what would really help is if I had a couple people that I trust, just leave an honest rating and review after they listen to an episode or two. And that's why I'm calling you, is just to see if you wouldn't mind listening to an episode or two and just leaving an honest rating and review. And when we ask that, when we ask 200 people or when we ask 5 people or 10 people, the script that I just gave you is going to work. Like we're going to feel compelled to do it. You're not asking for a 5-star, which is really good because we don't want to be compelled to do a 5-star. But you're at that place where you just hit that 10% mark on your podcast, which is outstanding. If you spend some time to just ask people, here's the short version again, listen to an episode or 2 and leave an honest review. I need a couple people that I trust to listen to an episode or 2 and leave an honest review. When you say that, you're going to get some really good social proof. It's going to be about the podcast, not about you. And that'll boost you up in the rankings a lot because you're getting a download or 2 per every person that you're asking. And they're leaving an honest rating and review after they listen to those episodes. So that means they're talking about the podcast, not you. Oh, I met Shawn at a real estate conference. He's a really cool guy. Hey, I listened to episode 24 and it was awesome talking about inflation and how inflation is bad. By the way, that's a real episode on his podcast. Shawn, hopefully that's helpful to you. I know it's definitely helpful for others that are listening. Besides just offloading some of the work and besides having a backlog and a more mapped out direction, if you're talking to the listener and pretend they're in the room with us right now, if you're speaking to the listener who's a new podcaster and you wanted to offer them some value that they haven't gotten yet today, what would you say? What would you share with a brand new podcaster?
Don't go on this alone. I know I've kind of already hit on this, but really leverage the people that know what they're doing in this industry, like an Adam. Obviously, I'm going to refer everyone that comes to me to Adam, but find someone that knows what they're doing that can help guide you. If you want to do something in life, why go at it alone? Why not find the person that's had success doing that before and use them to help guide you. That's what I did in real estate. I wanted to get in big commercial multifamily real estate. So I found someone that was already doing that I connected with. And first I brought value to them. And then that allowed me to connect with them. And then they taught me how to do what they do. And I would not be where I'm at if it wasn't for that individual. And the same thing goes with the podcasting. If I didn't reach out to Adam and his team, my podcast would not be in the top 10% right now. There's just no way it would be, because I don't have the skills or the know-how to get it there. So that's the big thing I would tell a new podcaster is don't feel you have to do this on your own, and you shouldn't. It's going to take you a lot longer to get to where you want to get than if you just reached out to someone that could show you the way, like an Adam.
Good stuff. And I don't know who says this quote, but it's like, if you want to go fast, go alone. But if you want to go far, go with others. And you're doing that. You're implementing that in both places right now that I can see. With your business, you are partnering with other people, and they have the ability also to partner with you. And so together, it's like a synergy. 1 + 1 equals higher than 2. And that's something that you're absolutely doing. You're giving them an opportunity, and you yourself, you would run out of money. There's no question about it.
Oh, yeah.
All of us, it doesn't matter if we have billions of dollars in the bank today. If we wanted to keep buying real estate with just our own money, eventually we will run out of money. We will have to use OPM. We will have to partner with other people. We will have to do it with somebody else. And you're also doing the exact same thing with your podcast. You're partnering with a team that knows what they're doing, that can edit, that can do all the post-production, that can kind of consult. And you're going to go far as a result of it. So I'm glad that you ended with that. I think it's really powerful, and it can be regardless of what we're doing. If you want to go to the next level, you need to be working with other people that either have done it or have proven that track record, who can partner with you, who can bring a piece of this to you. They bring the money, you find the deal. They do the editing, you record the content, whatever it is. I think that just a powerful way to end it. I appreciate all of your time. By the way, Shawn, all of the links that you've given us, all that stuff's in the show notes. So we don't even have to talk about that right now. If you're listening, you want to check out his podcast or connect with him, all that stuff's in the show notes right now. Go ahead and scroll down and connect with him, especially if you're curious about this multifamily syndication stuff. It is remarkable, and I'm all about supporting people like Shawn that are the good people doing it with integrity, that can have partners on their side to be able to get to the next level. So if you want to go far, go together. All right, man. Shawn, thank you. If you're listening, I will see you on the next episode. The next episode is just going to be me pouring into your business. I'm like Shawn. Every other episode is like me by myself, and I just am there pouring into your business. So I'll see you on the next episode. Shawn, thank you for the value that you added. You came to the table, shared your experience, the highlights, and what you've learned from the last little while. I'll see you guys on the next episode. Bye for now. 2 quick things before you go. Number 1, if you are looking to upgrade like your podcast equipment or just get your very first affordable microphone, then go to growyourshow.com/PDF. That link's in the show notes. Go ahead and scroll down. On that PDF is 100% equipment for your podcasting studio that I've personally vetted. My team has vetted this. We know that it works. We know that it's affordable, and we don't want you paying more for your podcasting equipment. So again, if you're looking to upgrade your equipment or get your very first inexpensive microphone that works great, that's where you go. And then number 2 is got a free course, A to Z, on everything you need to know about podcasting. And you don't have to go anywhere but the podcast in order to access it. You don't have to even give me an email address to access it. It is just the very first 6 episodes of this podcast. So what you'll do is you'll scroll down a bit. You'll click on the all episodes and scroll down, because we're hundreds of episodes in. And you'll see that episode 1, 2, 3, 4, 5, and 6 is a free course from A to Z on launching a top podcast. Take advantage of those 2 things. I'll see you on the next episode.